The Federal Reserve has signaled that it plans to keep its benchmark rate at a record low through at least the middle of 2013. Stocks have been up and down since the announcement as investors react to the Fed's decision. For more, we are joined now by former Richmond Federal Reserve President Al Broaddus. Al, great to have you back here with Matt and myself.
Nice to be back.
Good to have you here. Mike McKee earlier saying one of the most interesting decisions in 20 years. You've been a part of the Fed. Do you agree?
I would not disagree with that. I'd have to go back and check the record in detail, Carol, but it clearly is. The extended language, pinning it down 2 years out, is unexpected by most people, including me. I guess the key point here, just briefly, why did they do this? I think it's a signal that the committee as a whole, maybe not everybody on the committee, but the committee as a whole, is expecting a much weaker economic outlook than even at their last meeting 6 weeks or so ago. And there are reasons for that. It's not just that the most recent data have, some of it at least, has been weaker. It's also those benchmark revisions of the GDP figures going back a full year show that this slowdown is not something that just developed a couple of months ago. It's been going on now for a full year. The other thing, they show this in the language of the statement, so I think that's the key reason for it.
Hey, Al, also very key was these 3 dissenters. My understanding is you were a pretty big dissenter during your tenure at the Fed. How significant is it in your view, and do you think it's going to stop Ben Bernanke from taking more aggressive steps here?
Well, it didn't change the result today, Carol. I was surprised by the number of dissents. I think always you would like to have fewer dissents, especially in a time like this. But you're right. I did dissent a good bit when I was at the table. But all of my dissents were when we were in periods where I thought the inflation risk was rising and needed to be addressed more aggressively. This is a different ball game. If this is attempting to address not maybe a clear and present danger of deflation, but a move back in that direction from where we were at the time of the last meeting.
If we do get closer to a present risk of deflation, what kind of aggressive steps do you think the Fed could use? I mean, a lot of people have been talking about cutting rates on reserves, excess reserves. Do you think that would be a good move, or is it bad for, say, the overnight funding market?
Well, that would be one. If you were really looking, Matt, at a significant increase in the risk of deflation, which would be signal for, it's not happening yet, but it would be signal by measures of inflation expectations, to tip spreads and so forth. If the Fed saw that in a big way, it would have to move. It could start off with an intermediate move, like a drop in the rate on excess reserves, but at some point, I think clearly the committee would have to consider, and I think it would consider something like QE3.
I was going to say, what's the most aggressive step? So you're saying going out and purchasing assets again, printing money and purchasing assets with that printed cash?
That would be the action that they would need to take in those circumstances. Again, let me emphasize, we don't see it yet, but obviously the risk of that has risen recently.
Al, let me go back, though. Because of those 3 dissenting members of the Fed, I mean, is this going to then prevent Ben Bernanke potentially from doing QE3 here? Could it, in your view?
Or 2.5.
Or 2.5, whatever. But will it prevent the Fed from taking more quantitative easing actions here?
Well, I think all of the 3 dissenters are well-established economists and good people who are acting in good faith, and I'm sure that Chairman Bernanke respects that. But ultimately, he's got to make a decision and try to carry a majority with him. I think what this signals to me is that the chairman himself, to a greater degree than the 3 dissenters, sees a situation which could evolve into some sort of downward dynamic. And I think the reason for the really long extension forward in time of the promise of an easier policy, or a pretty easy policy, is to try to undercut that early on with what he sees as a strong and credible statement.
Wait, so
there are risks to that.
Wait, so forgive me. So do you think, bottom line, it would stop QE3 because of the dissents that we're seeing within the Fed?
No, I don't. I think if he saw this risk, again, continuing to escalate, and he wouldn't be the only person on the committee to see that, I think he'd hear the dissents, listen to them, but I don't think that would prevent him from acting if he felt that he needed to.
Good to get your viewpoint on that, as always. Hey, Al, thank you so much. We appreciate it.
Nice to be here.
Al Broaddus, former Richmond Federal Reserve president.